Welcome back to Business Vibes Only. I am Marteka Lee, the founder and CEO of Just Mind Your Biz LLC. How are y'all doing? How is business going? All right, I know it's been a while, okay? But I am back just in time for my favorite season, and that is tax season. We are 2 months away from the beginning of tax season for the tax year 2025. And I decided to do a series. I'm calling it Tax Tips Tuesday. All right. So every Tuesday from now until the end of January, I'm going to be releasing an episode on tax tips for all of my small business owners. All right. And what better way than to start off with the most popular question that I am asked, and that is, can I really write that off? Well, let's talk business. Can I really write that off? Well, here are a few of the most common overlooked business deductions. Okay. So, first, let's talk about the home office deduction. Okay. So, small business owners seem to be most hesitant with this deduction, and it's mainly due to misconceptions and just the fear of being audited. So let's discuss the rules. Let's talk about what the IRS says are the requirements for you to use the home office deduction. Okay. So first, the definition of home. All right. So your home can be a house, an apartment, condo. It can even be a separate space located on the property, like garage or let's say a shed, right? But the second rule is most important. So this space must be exclusive to your business, or a portion of your home is exclusively used to conduct business on a regular basis. Now, that is the key, a regular basis. And we'll come back to that. So if you meet both of those requirements, then you are able to deduct a portion of your home expenses. All right. If you don't deduct the actual expenses or a portion of the actual expenses, then you can also choose the simplified method. The simplified method just means that you get $5 per square foot of the space that you use on a regular basis to conduct business, up to a total of 300 square feet. Okay. So let's go back to this portion use, okay? Because the amount that you deduct needs to be the same percentage as the portion of the home that you are using to conduct business on a regular basis. So for an example, okay, let's just keep it simple. If your home is 1,000 square foot space, okay, and you use 300 square feet, that's your office space that you conduct business on a regular basis. All right. So 300 square feet, that's 30% of your home. So that means that you can use 30% of your home expenses. All right. Like I said, if you're not quite sure on what percentage that you should use, then you can also go to the simplified method. All right. Please hear me out when I say this. Okay. Do not write off 100% of your home expenses. All right. That most definitely is a red flag. It is going to put you at risk of an audit. So be sure to use a percentage, the related percentage to the portion of your home that you're conducting business on a regular basis. I know you're probably tired of me saying that, but we'll come back to that because that regular basis and conducting business is really, really important. And I'll get to that at the end when we talk about a hobby versus a business. All right. So moving on to number two. Number two is bank fees and interest. Listen, absolutely nobody likes paying for bank fees, credit card processing fees, transfer fees. Okay. But please know these expenses are deductible. So if you're using Square, PayPal, Stripe, whatever payment processing system that you use, those fees that you have to pay, they are tax deductible, as well as your business credit card interest, your business loan interest, that is also tax deductible. Take advantage of that. Now, do not deduct the payments that you make on your business credit card or your business loan. All right. I get asked that quite often. No, the payments are not deductible, but the interest and the fees related to, so if you have like a business credit card fee, an annual Amex fee or something that you have to pay, that is also deductible. All right. So number two, very important. And I was quite shocked to find out that that was an overlooked deduction. So let's be sure to write off those fees. And the third most common overlooked business deduction are deductions related to education and training. Okay. So that means, like, I'm a firm believer that every entrepreneur should constantly be educating yourself. You should constantly be perfecting your craft. Okay. So if you're taking courses, you're attending workshops, you might be working towards a professional certificate. These are tax deductible expenses. All right. So even networking events. Now, I go to a lot of networking events, okay? Because I believe in being a resource to my clients. I need to know the other professionals out there. I need to know what their expertise and their niche is, right? So that, you know, they might have a product or a service that my clients can benefit from. So I go to a lot of networking events, okay? And of course, just getting to know other people in my area and having a good entrepreneurial support system, okay? And so I want to read to you what the IRS says specifically when it comes to these expenses. So networking that is directly related to the business is deductible if ordinary and necessary to your industry or business. All right. And that is, for me, that is definitely necessary within my industry and for my business. So registration fees, travel costs, meals, member fees, all related expenses are indeed tax deductible. Now, as we have went over those three most common overlooked deductions, so the home office deduction, bank fees and interest, and deductions related to education and training, I want to discuss, do you have a hobby or a business? All right, that's important. So because I think that these deductions are most commonly unused due to the fear of an audit. So let's just talk about what might trigger an audit, right? And the number one thing is writing off expenses for your hobby and not your business. So there are 9 factors that the IRS uses to determine the difference between a hobby and a business, all right? And the main one is it profitable? A business is meant to be profitable. So now the reason why this creates a big risk of audit is like for a lot of my startup entrepreneurs, for a lot of business owners in the infancy phase. Yes, you have a lot of startup costs. You have a lot of overhead expenses, and I completely understand that. But the IRS declares that 3 of 5 consecutive years needs to be profitable. So definitely keep that in mind. Most importantly, for my minimal activity business owners, okay? If you're towing that $10,000 line, like I said, you're right in the startup phase, please be sure to understand that it is very important for you to show a profit at least 3 out of 5 consecutive years. Now, this is the same for my 6 and 7 figure small business owners. The same goes for you, but believe it or not, the most common misuse of business expenses and deductions are for the lower sales, lower what we consider minimal activity businesses, okay? But still, don't be a $500,000 business and you're writing off $600,000 in expenses and you're doing so in consecutive years, right? Even having a larger number in sales, you're still at risk of an audit if you continuously write off more than what you have made, okay? Business must be profitable 3 of 5 consecutive years. Now, what's funny that I discovered is even if it is a hobby, the IRS still wants you to report it. I know, it's crazy. I mean, I didn't make the law. I'm just the messenger, okay? But if you realize after watching this video, man, maybe this is a hobby. Maybe this is not a business because I'm not really profiting, right? The IRS still wants you to report the income. It is reported as other income, and you are ineligible in claiming any type of business deductions. All right. Just wanted to add that little piece in there. Okay. Well, that's it for today's Tax Tip Tuesdays. I tried to keep it light, okay? You know, taxes is a very sensitive subject. It's something that we all need to educate ourselves on, but most people avoid. So I hope you enjoyed the 3 most overlooked business deductions. I hope you become more comfortable in using the home office deduction if it applies to you, bank fees and interest, and all deductions related to education and training. And I want you to remember, listen, taxes, it requires strategy. It's a tool. So I want you to master it. Don't let it master you. All right? Let's talk business later. Thank you for watching.